So, welcome to the Perennial Pride podcast. Thanks for joining me on this episode. And so today we're going to unfortunately go into something that certainly doesn't feel great, is going into some of my past failures, right? We're talking about our personal finances, and as I grow older and hopefully wiser, and I've grown more open-minded, and I recognize the importance of continuing to grow. I think I value education so much more as I've gotten older. As I look for more teachable moments, certainly for my kids as they start getting older in their lives and having to pursue life, which certainly can be challenging, as we all know. And so I'm always looking to share these things. And, as growing up in my life, I was always one to be a perfectionist. I always was hard on myself and put you in a very stressful mode. I think you never appreciate all the good things that happen. And so now I've grown to recognize the importance of reflecting on failures and things that I learned along the way. And so, I love the spin on it. It's not like you lost. It's just, you gain something to learn, right? It's gotten you better, like all these failures or missteps. And, they're bad if you don't get anything from it and you don't learn. And so as someone in life, like trying to also progress my impact and get more enjoyment out of life, I got to learn from things. And this certainly applies to financial life. So I want to share some thoughts on it as relates to some of the missteps I've made as I've matured, even in my personal finances. It will never end. And that's I guess the fun part about it is that phrase. It's, success is not a destination, it's a journey, and life is a journey. And hopefully you get to enjoy it. Most of it, and a lot of it, I think, is just how you perceive it and look upon things, and not get down on yourself. I used to maybe get down on myself for failing, but now I do have a different perspective on it, and it's given me some more courage to try some stuff. So, it reminded me of once read it, like you think about baseball. This is close to baseball season. All the people who are iconic names in baseball history: Babe Ruth hit the most home runs, and maybe Cobb, who stole the most bases. But when you look underneath the hood and saw what they did, like Babe Ruth also had, although he had the most home runs, he had the most strikeouts in history. So he failed more than anyone else in history, right? But he hit the most home runs, so he had the courage to keep on going and driving, hopefully getting better. And Cobb was similar in nature, where he had the most stolen bases in a given year. I set the record, I think, at one point. And you compared him to somebody else who maybe had half the stolen bases, but he had got caught 30% of the time. While the other guy, he didn't have as many stolen bases, but he only got caught 5%. He just didn't take the risks that someone else at, say, Cobb would take. And so we had to learn from them, get better, and continue to be okay with failing. And it is something that certainly took me a while to get comfortable with. And hopefully that my kids are learning that along the way. It's okay to fail. And as long as you're taking a good positive approach with them and take some learnings, at least one learning out of it, and to progress you to become better as you move forward. And in our investing and financial space, it's always going to be, there's so much out there to learn. And we could never probably learn it all when you think about it. The economy and all how global it is now, how connected, the banking system, it just can be mind-numbing. So for a lot of people, it's they'll just stay on the typical trajectory because it's easier, right? It removes some of the noise around, and for some people, that's a good thing. But for those who are probably listening to a podcast like this, they're looking to enhance what they're doing with their finances. They're looking to gain more control of it, so they can gain more control of their lives. So this is for people who are looking to step outside the normal bounds of personal finances. And for those who've listened to other podcasts I've shared, the basic framework of how I think about finances, and I took this from Paradigm Life, a great company created by Patrick Donahoe, and some I've connected with a lot of advisors associated with that firm, and they do such wonderful things. And he created this hierarchy of wealth, and it kind of, if you think about pyramid, and it's loosely connected to the Maslow's hierarchy of needs, that at the base pyramid, the foundation is where we start, right? It's saving money, it's protections in place for life, health, whatever it is that's a risk to us, and storing cash, right? And we prefer high cash value life insurance as a core piece of what we do to store wealth. And then we start use those dollars to build up. And the first layer, tier two, after you build your foundation, is investing in things that you can own and control, whether it be your business, your real estate, or even personal development. And so this is the balance of you're investing in things that you hopefully have more control over, which ultimately reduces your risk. And so as you go up the pyramid, you either give up some control and then add some risk. And so the next layer in tier three are things that maybe you're working with private businesses or part of syndications, things where you may be connected with the team, but you're not actually controlling what's happening with the investment. So you do give up some control. And so today I want to share a little anecdote from my personal past, and I'm living through a little bit now, so I can reflect on it and the lessons learned from it, because I invested in something that it certainly turned bad. The investment group that was running it now is bankrupt, and certainly some of the leadership in that group basically were just not good people, and so the investments failed, and now they're going through class action suits to extract as much money they can to investors, and I'm one of them. And so I reflect on that. Thankfully, we'll get through it, but we're going through it, and I want to think back on what did I learn from that. And a lot of it is really important to take home as I kind of move forward. And some of it's just good reminders of things. And it's really important to do due diligence. I think for a lot of people who are investing, wherever they're investing, they may really don't know a lot about it. And for most people who are in starting out investing, they're just saying, I'm going to invest in the stock market. That's where I'm supposed to invest, or bonds, but never really take a look at what they're investing in, the types of companies, who's running them. And so that's really far removed from your access to control. So it does add some risk. So you can't completely remove it, but those are where most people are playing. So if you're getting into the world of evaluating maybe private investments, so obviously your own, your real estate, your business, right? You're controlling that. But as you move up the chain to tier three, where you're maybe working with teams that are doing, say, apartment syndications or private businesses themselves, and you're loaning them money or putting equity, really doing some due diligence. So where my story starts is when years ago I invested in something that sounded great, right? I invested in oil syndication in partnership. And unfortunately, it drew me in just to diversify a little bit into something that I was not invested in. It came with some, potential for tax benefits and kind of related to real estate in some sense, that it was kind of almost like a fix and flip sort of environment for oil and gas. And, it was tied to people that I knew well and thought I trusted. So I did not do the level of due diligence that I probably should have. And invested a bunch of money, and now unfortunately it's turned sour, and we'll see ultimately where it results. So what could I have done? What did I learn from all of that mess and what we're dealing with now? And so I want to step back and think about what if I had to do it again, what would I do? And so first off, I would make sure I'm very clear on what am I getting in this investment for? I often get a question of where should I invest? And so it's really important for your own investment too, as you're getting through this. And as I'm thinking about talking to my, past self years ago about this investment, like what's really ultimately the goal here? What am I trying to use this for? Is it primarily for income? Is it for growth? Is it for tax benefits, right? What is my purpose of getting into this investment and understanding whether it's short-term or long-term, right? There's going to be differences in that. And so getting clear on what we're investing for is really important, right? You have to have a purpose for it. So that's why we have, portfolios, and it isn't just your stock portfolio, it's portfolio of all your assets. How are they positioned? What are they doing for you short and long term? Having a good understanding of that will be key. So then you understand where it fits into your overall sort of strategy and plan. Right? That's really important. We can get so focused on a particular product or investment, and we lose sight of where it fits for us broadly. So that's really key number one. And at the time, I probably really didn't think too deeply about it. I was probably more enamored with some of the tax benefits, which, I'm so, for anyone who knows me and some philosophy, it's certainly that area that I do certainly pay attention to, but we can't let the tax tail wag the dog type of thing. And I think this is kind of what happened to me in this scenario. So it's really important to you to understand the purpose of it. So, it was also for a little bit diversification, as I mentioned before. So I think that was a perfect, because I had a lot of stuff in real estate and other things in private lending. So this was really dipping my toes into something that I knew I think was interesting, but I never had before in the energy side of the world. And so I think I just want to stress the importance of understanding that for yourself before you get into anything like this, right? And venture off into some new investment world. And, it always reminds me too of that Warren Buffett analogy. Says if you had a punch card of the number of investments, say 20 investments in your lifetime, if you only had 20 options, you would spend a lot more time looking at them, right? And getting deeper and understanding really if it's a right fit for you. But, in our world of today, we feel like we have endless amounts of punches we can have. And maybe it puts us in sometimes a less scrutinizing situation, and maybe we don't do the due diligence. So really a good reminder of that. So goal is number one, like what are you trying to achieve with this investment? What's it for? What's your time horizon, and sort of how does it fit into your personal values and sort of philosophies? So the second part about this, especially as it relates to working with teams, right? You might be working with an apartment syndicator or mobile home park. There's a whole host of varieties of alternative investments that are outside even the markets. But understanding the team that you're getting involved with, right? That's really important. I think the investment always becomes the focal point. But really, what I really neglected to do in this situation was really investigate the team themselves. Like, who was really managing this? I kind of trusted people that I knew that, thought this was good, but I really didn't investigate the players involved with this group all that much. I did a cursory look. So, obviously I would suggest if you're looking at a team that's, whether it's in oil, gas, or, real estate, or even ATMs, like alternative investments, you look at the team, right? And assess who they are. Obviously we start just like where everyone starts, Google names and sort of find, you imagine you can find a whole bunch in that way and see if they come up in news, anything negative there, and you can at least question it and bring it up and have the conversation with the folks on the team just to investigate, because you never know. And there's a lot of untruths on the internet as well. So you got to kind of dig a little deeper to find the truth, and do that through initial Google search. That's a simple way to do it. What you can also do is background checks, right? You can do these background checks that they don't know about on the individual leaders within that team to see if anything pops out, any lawsuits against them, any judgments. So you can get a sense of who you're dealing with. Now, granted, that still may not flag that it's a bad thing to do. It's just you have some history, and maybe they learn from their mistakes as well, which is good, and they're going down a different path. But at least gives you some information about their past, how they get into this, and what's their history, and hopefully gives you some insight of who you're working with. More importantly, like the value systems they have and the integrity that you're working with. So you can do those background checks. They're not that costly, and it gets you sense. I do certainly in my real estate and rental properties, doing background checks on the tenants that are coming in to see, if it's a good fit to work with them is important. So similar in nature. Obviously, you want to also talk to people who've invested with this group, right? That's so key, because you get some perspective on kind of how they operate, how they communicate with you. Are they upfront? Are they really easy to work with to get information? Do they provide you everything you need for your tax return, for instance? Like, what's the relationship like? And more importantly, how they've dealt with stress and things that don't go right. Because what we do know in just life in general, that things don't always go correctly. And really, it's important to understand how people are operating when things go poorly, right? And how do they adjust? Are they creative? Are they resourceful? And it's really important to kind of get a sense of that, because it's great when things are going perfectly, right? Everything's good and everything seems smooth, but really where the character of people comes when things don't go well. What do they do? Or do they have the ability to adapt? And are they looking after their investors? Really, that's really key to understand, because I'm a realist. Things will change. Economies will change. Investments could go haywire, even without something that the group did. It just, the environment could change, and it's just whether they're willing to get their efforts into solving the problem as opposed to now, running away from it. And so it's really important to understand the types of people you're working with, what's their track record, right? What's their history investing in this space? Have they gone actually through some turmoil, and kind of what are the lessons they learned through it all? So it's really important to ask those questions. If they're newer, it probably is going to, maybe pose some additional risk, but perhaps they're working with other seasoned investors in that space. In this case, in my scenario, they were relatively new. They didn't have a large track record. They had some people that, quote unquote, were experts in that field, and they would talk a great game, but it didn't have a lot of history. It just, in retrospect, I should have known better that this was going to be a bigger risk, but certainly was too trusting in it, and they were connected to people that I also knew. So it just, I did not do the right due diligence. So just some big tips for you to consider as you're thinking about some of these larger investments, to do some due diligence on the core team itself. And it's also important on the other side, like especially if you're in, some of these investments, there's a lot of different teams involved. So outside of the core team that maybe are part of the investment group, but what are other extended team members or groups that they're associated with? And so, again, in my situation, I didn't go that deep into trying to connect the dots of who their vendors were and who they associated with, and I probably should have. And so if you're involved or in assessing a potential investment coming up, say in oil and gas or real estate, like asking them, who are they working with? Who do they sort of have as vendors that they're working with, and doing a similar sort of review and of them, because obviously the hope is that you're working with people broadly who are kind of the same mindset and same culture and values, that they're trying to do the best and provide value for their investors, and they're going to treat them right. Or they, you figure they're going to connect with similar types of people. They're looking out for their clients, as well as, bringing in vendors who are going to also support their business, that kind of think the same way and are working with a level of integrity that you feel comfortable with. And hopefully, if that case happens where there's something bad happens, you got a broader team that are working in sync with this to hopefully right the ship and communicate effectively and look out for the best interests of the investor. So it's really important to go a little bit deeper, especially if you're making certainly a large investment in something, and really getting that diligence. And the last thing I would share around this, obviously the extended team, is to use your own personal network of not only investors or advisors, whether it be your legal folks, CPA, people around you that you trust, to get their opinion, right? They may not have all the experience around it, but they might be able to lend a very objective view on it from their experience, right? They come across and we can get so wrapped up in our own sort of worlds and see it from only one way. But I think when, going forward, it's good to kind of get a set of eyes and ears from people that you trust, that are, have a good, a different background than you even, right? That can bring their sort of insights and things that they know and experience into the conversation, and give you at least that broader set of thinking around that investment, and then maybe hopefully it helps you to make the best decision, right? May not change the path you're going down, but it may give you another question to ask, right, the operator, or gives you a pause on maybe needing to connect with a legal source to mitigate some of the liability risk to you. So just giving you a little bit more information to help protect you and your assets, which is huge, right? That's a big portion of it. Obviously, you want to grow this wealth, but you also don't want to expose yourself to something unnecessarily before putting your dollars in there and potentially your other assets at risk. So it's really important to maybe, ask your trusted advisors and network around you. So that's all I want to share with you today. Unfortunately, the investment I'm going through right now is getting down to waiting around for the courts to settle and bankruptcy, and it's who knows how long this will take. But it's a really good case for me to remind myself of the importance of doing due diligence and going through those extra steps to really ensure that you're investing in things that, hopefully will reduce risk, right? Even though you're going to have to take some on, how do we reduce it? And by going through these channels and taking the time, it may save you a lot of headache down the road. And this goes in line with a lot of our just general thinking around, our finances. Taking the time and effort to plan and think through things will hopefully position you to be able to weather all the storms that are coming down the pike and put you in a better position to win long term, not just short term. And that's hopefully will give you a better balance in life and certainly balance in your personal finances. So hopefully that was helpful, and we'll see you on the next episode of the Perennial Pride Podcast.
Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride Podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.